Good morning, Josh.
Morning, Richard. Happy Thursday.
Is that what day of the week it is?
Yeah, believe it or not.
Back at things like
I was gonna say, man, we're back at it.
I don't know, life seems like more of a blur
Yeah.
than it did a few years ago. I'm not sure if that's the aging process.
I'm gonna keep submitting, man.
I think
2
a lot
weeks
of
is not
lines
enough.
are getting blurred.
Yeah, man. As always, brother, I appreciate the invite back. Usually I do enough prep work here where I can come to you with a unified message. Not to say I haven't done my prep work, but I don't think I can stay unified just due to the chaos that's coming through the pipe on my end. And I've brought you market questions, crypto questions, Richard questions. I'm going to kind of hit a little bit of everything, but and we always start today. I try to start these little 2-week bi-weekly cadences with just like a finger on the pulse. You're in this day in, day out, and a lot of us are like zapping into our 9 to 5s and then coming back to you and getting our little temperature check. So I want to start there. It's been 2 weeks. We've had some breathing room. We've slept since. The markets have done their thing. Anything you need to get off your chest. I brought stats. S&P down year to date 16%. Bitcoin 53.7% year to date. Ethereum 59.6%. Yeah, man, just gauging your gut feel. Anything you need to get off your chest?
I don't think much has changed. I've been saying for a while I wouldn't be surprised to see a significant bear market rally, which I think is what we're starting to see right now. The thing that people really need to keep in mind when I say nothing's changed, the uncertainty is big, right? So the uncertainty has increased. It's not decreasing. There will be fluctuations in the midst of that uncertainty, right? So yesterday, the Fed came out and raised 75 basis points. People thought that Powell sounded a little bit dovish, like he might not do another big raise. But it's just a lot of uncertainty right now, and people can't forget that, right? So, and a part of the reason I think that the sort of dovish, what can we say, reaction to Powell's, press conference and raising the rates is because things are really oversold, right? Things have been crushed. The numbers you gave, those are already up from a bit where they were, right? So things have been over crushed, and probably not for the long run, but in the short run, we need to blow off some steam to the upside. I think that's what we're starting to see, but I don't think anything has changed in the big picture, which is a lot of uncertainty, needing to wring a lot of excess liquidity out of the economy. That's artificial liquidity that was inflated by money printing and stimulus, et cetera, right? So I think that's still where we're at. So I think this is a good time to be looking to lighten up on anything that you might not want in your portfolio long-term, and to continue to think about, what we think the future is going to look like in 5 or 10 years. And really understanding that it's not likely to look like the past.
Let's put a pin in this, the advice of lighten up. I want to circle back to that. You talked about yesterday's announcement. In our last call, I had to just briefly, due to time, brush on this, but I did mention the inflation. CPI has hit 4-decade high at 9.1%. I've got a couple graphs to show you, but there's a really cool one here that I showed. It's humbling. This is real time, so you're able to come in here and see where we're at. But as you scroll along, you can start to see where folks like Venezuela are at, and these other areas that are really getting crushed. And so there's a humbling sort of like gut check here. But I do want to actually, I'll show you this one too before I ask my question. Here's our year over year since 2002. You can see what CPI has done. You can actually sort of layer over gas prices on top of that and see how gas has impacted this. An even cooler way to look at this, the data, if I hit go here, is here's how it's been impacted here in the month of June. And you can see what's contributed to the spike of CPI. Energy obviously outweighing everything. You drill in a little bit further. Energy is 60% energy, commodities 60%, fuel oil 98. I'm continuing to drill in 98.5%. Energy commodities or gasoline types. Point being, gas is like tripled circled here. And you can see this in a few ways. I could really geek out on these graphs with you here after the call. I want to ask.
Awesome.
I want to ask what's going on. Yeah, definitely will. But I think the better question here is like, what is the resolution? What's the answer? When does this stop? Because as you continue to click, this just gets scarier and scarier. Where does this end? I know you're talking about things seem to be easing. Maybe there's a bear market on the horizon. Where are we at?
I think that, so there's one of the things that they were talking about yesterday was there's kind of two different measures of inflation, the core inflation, right? And the CPI. So there's the PCE and the CPI. The CPI has the food and energy in it. That's what, we, the public, we, the people are focused on because that's what is in our face, right? But the Federal Reserve actually looks at the PCE more, which doesn't have those food and inflation numbers in it because they believe it's a better predictor of inflation overall, right? And so that's what they're focused on. I think the CPI stuff is painful in the short term, but I think that these things are probably going to temper. And, gas prices go up and down. Mine was less than $4 a gallon this week when I filled up. So it's coming down.
Small
right?
wins. Yeah.
And we got another print of GDP this morning that showed contraction. We've got 2 quarters of contraction in a row now. It's not the technical definition of a recession, but it is the thumb, in the wind definition of a recession. Powell and Biden say they're sure we're not in a recession, but a lot of other people, very credible people, think that we are in a recession. So look, this is what I said earlier, more uncertainty, right? That is what we're dealing with, more uncertainty. And the more that people are able to embrace uncertainty, not try to latch on to a false uncertainty, keep an open mind, be ready to respond, right? The worst thing you can do is get anchored on the past right now, right? It's a time, we have to be more attentive, more vigilant, right? We have to take in more information to try to keep up to speed about what's going on. I always liked in the law enforcement, kind of the terrorism threat levels. And so right now in the markets, we're at a pretty high threat level where we have to be paying closer attention than we usually do to what's going on if we want to be able to respond. Look, if we're on a 5-10 year horizon, you don't need to worry about the day-to-day. It really will be counterproductive for you to be worrying about the day-to-day, right? If you're on even a 1 month to 3 year horizon, though, you do need to be paying closer attention. So we're in a heightened alert condition. I wouldn't call it code red, but probably code orange. And we have to be more attentive, more vigilant, and we have to work to sort things out for ourselves as best as possible, right? You take in the information, you process it, you find the people that you trust, and then you act accordingly.
I told you we were going to put a pin in this idea of lighten up. I think you're kind of guiding me this direction. And so I'm going to just ask I'm going to pull up this little quote here I saw, I believe it's a couple of days ago, and maybe we can talk through this really quickly. I'm going to preface my question with, I understand there's no such thing as a golden bullet answer, right? Or a silver bullet answer. Like we're gonna be able to knock every problem down with an answer. But I read through this. I saw this in a newsletter yesterday. This is written by Ryan Peterson, CEO of Flexport. And I just want to use it as guidance. With inflation at 9.1%, if your portfolio makes less than 12% a year, the IRS takes 100% of your real dollar gains. That's obviously assuming if I sold, right? If I'm selling out now, which I don't think is, I guess maybe that's where I'm headed with this. That's the first option. The second option, if I keep trucking here, is if I keep my money in the bank, it doesn't seem like the best option. This is written by the Milk Road. Think of your money as a giant bowl of ice cream. Inflation is turning up the temperature and slowly causing that ice cream to melt. This is a tricky one because the $100,000 remains in the bank. You get to see that $100,000. It's still there, but it can't buy the same stuff, right? It's becoming watered down. Your purchasing power is gone. Like a cell phone battery that only lasts 4 hours, even if fully charged. So both of these talking about one, you can't sell right now. The other is you can't keep your money in the bank. I think that's like you're stuck between a rock and a hard place. And I want to kind of just pose that sort of this tree to you and maybe just ask for some advice for the folks that aren't in this in the day to day. What are we supposed to be doing right now?
Well, let's take your situation, Josh.
Please.
Right? You're a young person, you got a job, you've got lots of earning years ahead of you. You could be developing your own business on the side. You are building your own business with Roads to Wealth, right? So I think you need to be thinking about different things than somebody, who just sold their business and is retiring or, trying to figure out how to make their money last for another 30 years, right? So people are all in different places.
Totally.
My overall thesis is that the financialization of everything, that era is over, that the financial system is not going to be the most productive place, to keep your money. It's not going to grow like it has grown over the past 30 years because, the interest rates came down, and the money printing went on until inflation started to go up. That was a long time in the making. It's not going to come out, overnight, and it's going to take a while. So, if you have to make your money in the financial system, right, in the short run, you should be thinking about how to take advantage of some of these higher bond yields, that we're seeing now. Again, I think you have to be vigilant and attentive about your financial assets. If you're a young person like yourself, I'd be building a business. I'd be investing for the long term, dollar cost averaging into stuff right now, right? You should be excited that, you can buy stuff at half price. Then doesn't mean they won't fall in half again. I think that's a real good chance, but you buy more, right? So you dollar cost average in and you're thinking, wow, I've got 30 years to make this work. Cool. Right? So in some ways, if I were you, I'd be excited.
Yes, sir. That's exactly what I'll say but I'm speaking for myself. That's exactly what I needed to hear. I am going to scratch my own back in my next question too, unless you have something to jump on.
Stay away. I would be really careful about the really hypey stuff. What we saw in 21 with the digital currencies, just crazy stuff with no accountability and really nothing, productive. I think that's going to be, I think there's still a lot of pain ahead for those kinds of just pure speculations. I'll not call them outright Ponzi schemes, but certainly had a Ponzi component to them, right? I don't think that's where the future lies. I think we are going to have to improve productivity. We're going to have to create value. We're going to have to learn to work together again. And those are the things that, like I just was making my list the other day, what did I have on there? Chewy, Chewy. I think people love their pets, I think Chewy's doing a great job with brand loyalty. They're off the charts. And, I'm interested in it. So, not saying it can't fall further, but this is a good, comfortable time for me to start building a position in Chewy, for example. I haven't fully analyzed it yet, but that's the kind of thing I think we should be thinking about, right? Those are the kinds of opportunities that I think we have right now. I put Chewy, Etsy, and Shopify all on my short list of stocks that, I think they're great brands. I think they are doing good work in the economy. They're products that I use and that my family uses. And they're down 60% or more, right? Doesn't mean, again, they won't fall another, something that's down 60%, right? So Chewy went from 110 down to 40, right? Doesn't mean it can't fall to 30 or 20, right? And that would be another 25 to 50% fall from 40.
Yep.
Okay, that's not trivial. It may look like, well, it's only $20 more from 110, right? But
Yeah.
to you, if you're buying at 40, $30 is a 25% loss. Okay. So, that's where something like RiskSmith can come in and help you to position size based on volatility, et cetera. But I'm just saying there's a lot of things to be excited about.
Yeah. Let's put a pin in that. Give me one question and I want to circle back because I read a newsletter from you earlier this week. Then I do think you have some things cooking that I didn't prep you for, but I do want to talk about. Before I do that, I told you that's the answer I needed on that question. I had one more little personal itch.
Don't get worked up. Don't let the media get you worked up.
Easier said than done, man.
That's
what we need you for.
You just need it, man. You got to do it. You got to just
100%
unplug, turn it off, intentionally consume the content that you need to make the decisions that are relevant to you. Yeah. Otherwise, they're making decisions for you. They really are. They want to make decisions for you. They want to modify your behavior so that you do the things that are good for their businesses, their advertisers, et cetera, not for you. And if you don't take responsibility for your own decision-making, for your own content consumption, for your own investing decisions, somebody else is happy to do it for you.
I want you to give me a little bit of guidance here. This is not your area of expertise. You're not in this field every day, but I do want to share this. There's another interesting trend number that I saw that I wanted to see if you had any thoughts, ideas around. Headline pretty much says it all here, but in June, 15% of all American home sale agreements were canceled. That's the highest that we've seen in more than 2 years. For reference, May of 2021, so a little over a year ago, that was 6.6%. So it's more than doubled. The article here, we can continue on, blames it on rising interest rates, inflation, which makes a lot of sense as the heavy contributors. I personally, you said, let's use you as an example. I think this is even the better time to use me as an example. I'm in an apartment. I'm getting ready to house hack. I'm entering this field myself in that I've got some disposable income. I could pull the trigger on a house. But as I look at something like this, and you see what these interest rates have done over month, and where I'm at on this graphic, it almost you feel silly looking at this.
If you need to buy a house right now, you should buy a house. Okay. Mortgage rates will fluctuate, right? If they come down, you can refinance at a lower rate. I think odds are that they're probably going to keep going up, so meanwhile, I do think real estate prices are going to come down. I don't see how they can stay at the levels they're at when the economy is taking a big hit and when interest rates are going up like that. It's a lot more expensive to own a home. Meanwhile, people are in a very nesting mode right now. Everybody wants their nest and wants their place where they can feel safe because of the increased uncertainty, right? And financial assets are going down and real estate's still holding steady. Right. So there's a tremendous amount of wealth in real estate. We went through the real estate crash of 2008. Nobody wants to see that again, especially the powers that be. Right. So meanwhile, I do think that real estate prices have to come down. There's an 18-year cycle in real estate that peaks around 2023. So, by 2024, 25, these 18-year cycles can be off by a year or so, but it's been a pretty reliable cycle. So, I do think that things will come down, but if you have to act now for some reason, it's not a bad time, right? You just have to make it work for you in your overall picture, right? So
I think you hit it, man. Again, that's two for me, and the folks are gonna be like, "What? This guy's just talking about himself now."
well,
I have
I
two
think
things I
everybody
want to
wants to know
brush.
about the markets and real estate.
Yeah. There are two really quick things I'm going to brush on, and then I want to get to this newsletter that I read from you. I'm not even going to share the screen and pull it back. I'll just run through these really quickly. I thought this was interesting. Last week, Solana brought into their first in real life physical store. It's in New York City. I've got a post here where you can see just the people hanging out and how populated the store actually gets. Point of this place, you're able to show up. You can learn about the ecosystem, about Web3. You know, we actually talked about, and let's see if I can do this on the fly. We talked about STEPN. Here we go. And you can go in there, actually learn about the game, play that. We talked about that a few weeks ago and how you can actually exercise to earn. You can set up your first wallet. You can buy your first NFT. I mean, this is something really cool.
Good idea.
It's really, really cool. Yeah.
Pretty good way to do it.
Yeah, a little onboarding for the blockchain. I thought this was slick.
Yeah.
Solana Spaces. Good. You can follow that on Twitter. Like I said, I want to blast through this. This was something I wanted to circle just because I don't even have a question here, but damn it, I thought Elon had diamond hands. And this was released Tuesday. Tesla sold off 75% of their Bitcoin. I pulled some screenshots just to show, like, come on, man, you lied to us.
All this tells you, Josh, is that Elon is human, just like the rest of us. You know, he got caught up in the leverage and the speculative excess, and now he's being forced. You know, he took on buying Twitter, right? I mean, talk about selling his Bitcoin. He's trying to get out of the Twitter deal.
That's right. Yeah.
So just because you're rich doesn't mean you don't do foolish things, right? And that's my main message, is try not to do foolish things, you know, especially involving leverage. Deleverage right now. That's the main thing that's going on. That's the main thing, the trend in the economy, deleverage. You know, if you're going to be buying a house, for example, don't be buying a frothy house in a really speculative area. Right? That's leverage. You want to, you know, buy a fixer upper or something that if you have to put your own sweat equity into it to get your money back out of it, you can, right? So just watch out for leverage. Elon over levered, and just like, you know, the day traders in GameStop, you know, that leverage comes back to bite you.
Yeah.
And deleveraging is the theme of, I think, the next, you know, several years. And so act accordingly.
I've been guiding us towards this. I've been saving it to the end, and I'm going to get us there. This is from the 25th. It's just 2-3 days ago now. I read through your RiskSmith update, and while you and I can keep temperature checks and talk about the markets and things like this type of news is always news to me as well. And so I read through this, blitzed through it, got excited about, damn, you guys are still, I mean, it seems like you're releasing features and capabilities on a weekly basis now. There's a couple things I wanted to ask you about, but first is the very first call out here. We've got futures. And I don't think that's something that we've talked about here on the podcast, the show at all. I guess there's a twofold thing. I'd love to see you sort of walk through, you do some call outs here of what's been added, but maybe you could share the ad, talk a little bit about, you know, what this feature looks like. But the real question is, I mean, what are futures? What's the use case here?
Well, futures are another type of financial contract. Okay. So started out with commodities, say wheat, you know, so there are large corporations that produce wheat, right? And there's large corporations that consume wheat. Think of General Mills or Kellogg, for example. So you have producers and consumers of commodities. So for them, the futures markets were created where they could hedge their risk. So the producers, the growers, right, could say they can know 6 months in advance, let's say, what they're going to earn for their wheat. and they can deliver that to the commodities exchange. They can deliver it and get paid, 6 months in the future. So that's a futures contract. And the consumer of that, bulk wheat can buy 6 months ahead of time and know what they're going to have to pay. So they know their inputs into their products,
Wow.
input costs, right? So those are the futures markets. They're mostly out of Chicago, the Chicago Mercantile Exchange, Chicago Board of Trade, et cetera. And those are the commodities markets, right? But then we started doing financial futures. So you could do futures on the S&P 500 or futures on treasury bonds. Now you can do futures on Bitcoin, futures on volatility, futures on everything. So they're very liquid markets, but they give you a good sense of, like the S&P 500 or corn, kind of help you have a picture of almost like sectors, where you can zero in on something specific, like corn, let's just say, right? Or wheat, or maybe corn and wheat and soybeans, all the food products. So it's an interesting place to both kind of keep your, finger in the wind about what's going on with markets, look at correlations, et cetera. But then if you want to actually speculate in the futures markets, they can be quite dangerous. It's not for everybody because they have a lot of leverage and a lot of margin, but they're very efficient for trading and speculation.
And so this first update here, did you, is it 6 futures into the app? Is it unlimited?
No, I
or
think
what
there's
does this look
about
like?
20 futures in there. Let me see if I can just share my screen real quick.
And out of curiosity, I mean, that's something you and I haven't touched on at all. Is that something you play with, look at, or was this just a feature request from the users?
One more time, say that again.
Yeah, was this a feature request from your users, or is this something that you've started or have leveraged into your portfolio? It's just not something that you and I have hit
I
on
do
yet.
futures myself, so
Okay.
I use futures, and I wanted them in the app, so they got in there. All right, let me
Scratch
just
the
get my
itch.
screen here. Where am I? I lost the other Zoom window. All right, there it is. All right, so this is the app here. And so I made this futures portfolio. So these are all different futures. Natural gas is NG, ES is the E-mini S&P. Look how volatile natural gas is, right? Boom, 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 boom. Whereas the S&P 500, less volatile. ZT, I think those are 10-year treasuries, so very little volatility there, right? Everything's just 0.5%, in a day. But it's fun to look at these and get a picture of kind of what I really like to look at is the covariance matrix here that's showing me the correlation of different things. So don't know how clearly that's coming through. But,
yeah, you can see it for sure.
It's interesting to me, natural gas, for example, is very uncorrelated to almost everything, right? Not very correlated to the S&P, to bonds, or it's correlated. HG, I think, is copper. NASDAQ is the NQ, palladium. It's really uncorrelated. So as somebody who does trade futures, natural gas, very volatile, but I'm interested in it because it's uncorrelated to other futures contracts that I also might be involved in, like the S&P 500 or the NASDAQ or bonds, et cetera. So, gold is another one in here. Gold and silver finally have been rallying the last couple of days. So if you're interested in futures, if you're involved in futures, this is a great way to start to look at them through the lens of RiskSmith.
And Richard, we don't have to see this yet, but I am going to put you on the spot, maybe with like a feature ask, but is it possible, to your point, this NG here, natural gas, very uncorrelated to every other asset class we saw there, but those were all futures. And I don't think someone would have, maybe they would, but I don't think they'd have 15 futures in their portfolio. Could we see natural gas versus true tickers and start to look at your own portfolio and see how those are correlated with one another yet?
Yeah, I mean, I build a lot of different portfolios. Like these are the SPDR ETFs, right? The S&P 500 broken up into different asset classes.
Yep.
And so you can see here, they're all pretty correlated
Awesome.
to one another because they are stocks, right, in the S&P 500 essentially. But, you know, if I wanted to then look at, I think UNG is the natural gas fund, right? So I could take that, drop it in here, and see how it relates to the different sectors.
It's exactly what I'm asking. Yeah.
And, you know, sure enough, it's pretty uncorrelated. It's going
Check
to be
that out.
most highly correlated to energy, but even that's only 21%. Okay. But it's also very volatile. So that's the kind of thing I do with RiskSmith all the time. Just while we're here also though, we've just added alerts so you can get alerted to like what your D score when it crosses different thresholds, your risk efficiency. And there's some major improvements coming to this interface very soon. We also have these collections here. So I can go make a collection. This one's from Whale Wisdom of small cap stocks that are held by successful asset managers. And I can see how they're correlated to a specific portfolio. So in this case, this was the sector ETFs. But let me just pull up another one here because.
And Richard, that was the other thing I was going to ask you about. Collections was also mentioned in the email, which I mean, it sounded like it's basically just a watch list on steroids.
It is a watch list on steroids. By the way, you can also look at your portfolio in a list view now, and you can see what the risk efficiency is of each asset in your portfolio, the D score, et cetera, kind of how your portfolio breaks down. But let's say this is your portfolio, you know, a dozen assets in here, and you want to potentially diversify it a bit more, or you've got some more money to put to work, you want to find a new stock, right? You can go over to collections. You can say, hey, here's this collection. I want to see how things are correlated to that particular portfolio. Those correlations just calculated, okay? I can rank them, find the ones that are, one more time here, come on. Actually, I can't get that to. For some reason that's not sorting right, but I can go down this way and just look for ones that are uncorrelated, you know, 21%, minus 2% here. COHR might be one worth looking at. DDI. So then
Check
I can
this
say,
out.
well,
And you're
what
pairing it
happens if I add
against
this one
your
to my
original portfolio. Wow.
Right. Yeah.
That's slick.
Then I can go back to the portfolio. I just added that stock in, Double Down Interactive, and it'll recompute the risk efficiency in the D score. Pretty sure that made it go up. So that's the kind of thing that you can do.
That is slick, man.
It really is coming along, and it's getting better every day. And you can't do this anywhere else.
I don't know how you're moving so fast. I feel like you got a bunch of minions working for you, man. Like this is wild.
I've been involved in software development for a long time and web development. What's different this time is I have, instead of hiring a lot of mediocre people, I've just hired a couple of rock stars. And it makes all the difference, you know.
It's showing.
Even if you can't move quite as fast overall, it's much more efficient. And when you're working with people that know what they're doing and that love what they're doing and are really good at it, it's a lot more fun too. So you know, it feels slow to us because we want to get all this stuff out there, you know, yesterday. But overall, I'm really thrilled with how it's coming along, and the team's doing a great job. So proud of them. So
yeah, it feels slow for you because you know what end state is supposed to look like.
Yeah,
damn, I can't get there fast
I know
enough.
what's in the backlog, you know,
exactly.
that I want to be out there, right?
For us, it feels finished, man. I'm like, man, this is slick. Yeah. Man, I wanted to touch on this ETH merge, but we've got a few weeks, and I don't want to run over what we just saw.
When is the ETH merge officially supposed to happen?
I saw they released it. It's supposed to be middle of September.
Well, I thought what interesting was Ethereum Classic like rocketed up.
That's exactly what I was going to say.
People are like nostalgic already for for the old ETH. right?
I have too many notes about the merge, and I'm going to bring it to you in the next call where we can spend 4, 5, 6 minutes unpacking it. But
something I'd
every
like to
2
talk
weeks, man.
about, because I don't quite get the idea of proof of stake, right? I know that it brings down the transaction costs, the energy costs, right? Because you don't have to expend as much energy as you do for proof of work. But it just seems like proof of stake is a form of centralization to me, right? It's certain players who are staking the network, who ultimately have more control than the other players on the network. And how is that different than, the Visa, MasterCard, Discover bank system that we have today, right? I mean, you could say the banks, the credit card companies, et cetera, are kind of staking our financial system. So that's something that I don't fully understand. I'd love to understand better. Maybe we can talk about it sometime.
100%.
And sounds like a good theme. And Josh, I wanted to go back before we leave today and just touch on something that we talked about briefly last week, which was those pictures of the solar system, right? Or not of the solar system, of the universe. And one of the things that I've learned and really concluded from my own research into science, et cetera, right, is that we cannot separate the observer from the observed. Okay, so this goes back to the quantum enigma, quantum mechanics, right? You cannot separate the observer and the observed in a scientific process. Okay, that's what quantum mechanics shows us. So when we're, to me, this is one of the biggest mental shifts that we have to make as a society and as a culture. We think that things are out there, that they're not us, right? And that somehow they're separate from us. But science shows us that that is a blurry line, going back to the blurry lines we were talking about in the beginning, right? It's a blurry line. And so I think that our whole kind of cultural and social approach of like externalizing things and controlling things, and this is part of finance too, right? This is part of the markets. Again, it's not this black and white out there in here reality. Okay. So that is what, if I want to get something off my chest, that's what I want to get off my chest.
I think what you're,
I want to get off my chest that this idea that, we're insignificant, we're a speck of dust on a speck of dust. No,
man,
you can't, it's not true, right? We have to recognize that we are inseparable from what we are observing. And that's true in finance. It's true when we're marveling at the universe, and it's a better place to live from.
Yeah.
And it's a better place to be together from.
Awesome message. Thank you for sharing. You got me leaning though when you brought up the solar system. I thought you were going to say over the last 2 weeks I've done some research and I believe in aliens now. And I thought you were going. I was about to get so excited. Yeah. Thank you for sharing.
We have to be careful with these narratives, okay, that haven't been proven and that we really don't know. Right? I mean, we should say at a minimum, we're agnostic, right? There's nothing to say that it's true, right? Have you ever met an alien?
Not yet.
I haven't either, that I know of, right?
Alien-like folks, though, for sure.
Anyway, it's a tricky space when you start to buy into narratives, that you can't verify.
Totally. Bro, this was an awesome conversation. I told you we were going to bounce around. I wasn't expecting to end on aliens, but I think it's a good full circle. Thank you very much for giving me another week, another 40-ish minutes of your time. And hopefully we get this again here in a couple of weeks, man. Thank you very much.
Look forward to it. Take care.
Cheers.